So, what I wanted to talk about today is I wanted to give a little crash course into harmonic trading. I get the question a lot, obviously, of how do I actually start learning harmonics, and I always reference to the same old post, but that post is pretty old. That was literally my first stream in Unity. So, as you can imagine, I have changed a few things, I have adapted a few things, and in general, let's be honest, I'm a bit more confident in streaming now than I was back then because I was really nervous first time streaming there because, well, it's the first time streaming. Um, so I want to make a new version that is easier to follow and that I can keep referencing back to where you know there's no that is like up to date. So let's do that. What we're gonna do is we're gonna talk about harmonics. Now, to talk about harmonics, we have to start somewhere else. To talk about harmonics, we actually have to start with traditional TA, which is very weird. Because as you may know from harmonics, harmonics are generally M shapes, where you look too long at D, or they are W shapes, where you have a W like this, and you look too short at D. However, that is not where we start. We start harmonics at a way simpler place, at something that used to be called a lightning pattern and that we currently have adapted to be an AB equals CD. So let's start with lightning patterns. Lightning patterns are a very old traditional form of TA, so like your regular candlestick patterns like a head and shoulders or a cup and handle, etc. That comes from the time where people still had to draw everything out. They had to like print their charts out, put it on pen and paper, and actually draw it. And what it does is very simple. Let's say you are someone that is interested in buying ETH right over here. What you can do is you can look to the left, which is something that most people instantly do. They will either instantly look to the left consciously or subconsciously. It is something that everyone does, because if you're looking to buy something, you're going to look at the data you have. Nothing on the right, obviously. Everything is on the left. So when we look to the left, there is one very important price lag that we will always see, being the previous price lag. When we look at this price lag, what we can see is, hey, after we went down this far, we got a bounce. It's very simple. So let's use a little measurement tool for it, the price range. After we went down $2,700, that's when we bounced. Lightning patterns come from people consciously or subconsciously looking at this. And how we use them is like this. We take that price lag down and we very simply copy it and move it on top of that bounce. So you can see that, let me do it as precise as possible. You can see that I simply copied this little price range, so $2,700, put it at the top of this. So essentially what we have is we have one price leg down, like that. We have one price leg up, just like that. And then we have the same price leg down, the same price leg down again. Looks a little bit like a lightning bolt, right? That is where the name lightning pattern comes from. And what we see, and this is something that happens all over the market. This is a very common thing, and once you start looking for it, you will notice it too. What you will see is, hey, when we get to that point again, once again, consciously or subconsciously, that ends up being the place where we bounce. And the reason for that is because people will look at a chart, they will look to the left, they will see this, and if they know it or not, they will see this and in their brain apply it like, hey, if we get there again, that is likely going to be the place where we bounce. Because last time we dropped that far, that's why we bounced. It's a very simple pattern, and it works really well. This pattern is at the core of harmonic trading. Harmonics consists of a few things. Harmonics consists of 1, bit, 2, lightning patterns. There's a few other things, right? It took inspiration from some other fields of TA, but these are the most important ones. So this looks very bootleg. It is not that precise, etc. The way we actually use this to be more precise is with trend-based fib extensions, with this tool. Now, what I'm going to do first is I'm going to draw it, and I'm going to quickly disable everything except for the 0 and the 1. And then you will see what I mean exactly. So, this is how trend-based fib extensions are calculated. Not a lot of people know this. A lot of people just think this is just another fib, and then where the numbers come from, that is a mystery. This is how they are calculated. So, so when we place that trend-based fib extension exactly where we just did it with measuring the length, right? So at the start of the move, then at the first point where we get that first bounce, and then where the bounce ended, what you will see is that that 1 is going to be more or less where we bounce. We will get to why these sometimes get front run in a bit. In general, for now, for like the next 15 minutes, assume that there's a reason why it doesn't always hit exactly. This is how trend-based fib extensions are calculated, and this is at the absolute core of harmonic trading. This pattern, you can find it everywhere. I always use Sui as an example because Sui's very textbook. It had a lot of them in a row. Where, for example, right over here, we can do the same thing. I'll just do it with a little a trendline tool first, right? Just to showcase that it's actually the same length. If I take the first price leg down, I move this over the candle over here. Where did we end up bouncing? Exact same length. And once again, to be a bit more precise with the trend-based fib extension, that is where we bounced. This is a very simple pattern that is almost entirely forgotten because people don't actually use this anymore, even though it works very well. There's a few ways you can use this pattern. First of all, you can just trade it. Very simple. If you see something like this, you measure the price length like this, and you see an actual reaction. So in this case, you would likely have to go to a lower time frame. You see an actual reaction. Okay, this one wasn't really tradable, right? It closed all the way up here. You see a reaction. You can take a position based on that. You can take a long at one of those levels. These give you instant key areas. The second one is for general direction. And what I mean by that is, let's go to a very high time frame. Let's go on to BTC. Is this chart empty? Not really. Is this chart empty? Yes. Let's get over to a higher time frame and use it as more of a trade confluence than as an actual trade idea. This is something that works really well on a higher time frame. We can simply take the bottom of a move. We take the first point where price actually fully stagnated, and we put the last point at the bottom of a move. It's very simple. Same pattern everywhere, and you will see that more often than not, this is going to give you very, very confluent areas to look for reversals. Now, as you may see on any of my charts, you will never see this. I will never just have a trend-based fib extension on this. The reason for that is because we have adapted this pattern as harmonic traders, because harmonic traders really like fibs. So, what if we use this exact same concept and we add fibs to it? Let's go back to Suri. When we go back to Suri, and I'm going to go back to the exact same point. Let me also just enable replay mode for a bit so I can 3D change time frames and that kind of stuff. When we identify one of these price legs, we notice this is a very important price leg. We can use lightning patterns on it, but you don't always know where exactly it's going to react. You don't always know it, for the reason that, hey, maybe this move simply isn't over yet, and we don't want to put it here, but we want to put it here. So what we do for that is we use fibs alongside this confluence. So when we pull an actual fib from where we start that lightning pattern to where the first move ends, what you will see is, hey, this essentially touched the 886. Whenever price reacts off of fib levels, that is giving us an entirely different pattern. Because every single fib level, because it is based on math, and so our simple price measurement systems, so simply 2700 down and then 2700 down again, they will always have corresponding ratios on the other side. That may sound a bit more complicated, but it's very simple. Let me put a little cheat sheet on the screen to show exactly what I mean. So when we look at this little cheat sheet, these are all of the numbers. You don't have to remember all of these out of the top of your head. That is absolutely not needed. What you will see, and let me also just share it in here, is this. These ratios at 0.5 has a corresponding extension at 2.0. 618 has a 1618, 707, 1 for 1, etc. We currently have a 0.886. That is what we reacted off of. So let's take that 0.886 and look at what extension we have. It has a 113 extension. So what can we use that for? What we can do is, now that we know that, is we pull a fib from the other side. So instead of measuring this price leg, we now measure the price leg after that. And what you will see is that that 113 is going to be almost at the exact same spot as that trend-based fib extension 1. That is what we added as harmonic traders to lightning patterns. Essentially, what it's saying is, okay, what if we don't just take a random distance every time? What if we don't take every single price leg? But what if we only take the price legs that have reacted to fibs, that have exact Fibonacci ratios attached to them? That is this little tool right there, the ABCD pattern. So to make it a bit more simple, I'm going to use that tool. I will use the ABCD. I'm going to snap this. By the way, for quick little tip, if you want to use Fibonacci tools, I recommend holding Control, so you can snap everything to the wicks. Activate little magnet is really useful. So let's use this ABCD tool. We place our A, we place our B, and we place our C. What you will see is that A to C is going to give you the exact number of where it reacted. This is very, very close to 0.886. So we can say, okay, if that is very close to 0.886, let's put it at the 113, right over there. That is what we call an ABCD. This is at the absolute core of harmonic trading. It is a very simple but a very useful pattern to use. Now, that is how you initially draw it. But as I said, we use fibs, we use lightning patterns. We use those two parts. So what I personally do is I will measure them both. So in this case, it's going to give like almost a line, right? Because they are at the exact same spot. So what I will usually do is I will take that trend-based fib extension, place it at A, B, C, exactly what we've done multiple times now. And then I'm going to measure the fib manually. So this B to D fib, that's what I'm going to measure by drawing a fib from B to C, exactly like we just did. And I will usually mark this as a little box. So that way I have a little box that tells me, hey, this is where price should react. And if it does, we can take a position based upon it. Are there any questions about this so far? Because I know, I know I'm going through the information very fast because it's meant as a little crash course, right? So we're going to get through all of the basics, and that's going to be the course. But if you do have questions, please put them in chat. Oh, but for now, but in this case, you take a position after a candle close. That is usually up for either personal judgment or depending on literally how it reacts. I am someone that doesn't like setting limit orders, except for spot. For spot, it's fine. Because what if you actually close your candles below it? But that's an entirely different story, right? I almost always look for a reaction, but there are a lot of traders that use this exact same system and use limit orders. So that is up to you to decide. Okay. I'm going to show another example. I'm going to go back to BTC and draw this box again, but this time on BTC. So I'm going to do the same thing. We're going to go back on BTC, back on the macro chart, and we're going to draw this again. So when we use that ABCD over here, what you will see is 0.426. That is not really anything immediately when you look at the ratios. For reference, these are the ratios. What we have for A to B, this should be a B, right? I've placed the extra point on it, but for A to C, sorry, is we have something called tolerance. I personally almost always use 3% tolerance, so 0.382 would be 0.412, and or a 0.352, 3% up and down, so 0.03 up and down. The textbook is 5%, which is a lot. So to know if it's still valid, what you can do is you take the ratio. The textbook validity is plus minus 0.05. That is going to be your maximum and your minimum. So we can take 0.382 plus 0.05. That is going to be what's called 0.432. Is that within tolerance? Yes, it is. I almost always use 3%. For macro, I do use 5% because it's macro. In general, this is the maximum tolerance to have that question answered preemptively. So let's draw it out. What we can see is, if we go back to the cheat sheet, the 0.32 lines up to a bunch of different numbers. It is almost always going to be the 0.224 in reality. It's almost never a different one. The way you can check which ratio you have to use is by simply drawing the trend-based fib extension first. So we draw the pattern, we draw the trend-based fib extension, we have the one right over there. That is our first very important level. Then we're going to get to the second level by drawing that fib, once again, from B to C, just like that, and that's where we have our second level. So we have two very important levels, very close to each other. I'm going to place those in a little box. And I personally, because you can see, I trade a lot of harmonics, always mark them with what they are. So in this case, that is an AB equals CD. And then I will always hide the fibs to make it easier to read. And that's why you have your pattern. Now, there are several use cases for this. First one is obvious. You can take a position based upon this, which is something you would usually do on the lower time frame. So for example, if you see one of these four on like a 4-hour time frame, you can go into the 1 hour, take a position based upon that. On a weekly time frame, that is a bit more difficult to do. Because yeah, you can, for example, wait for reactions, right? But as you can see, well, that's where we reacted, but that's where the candle closed. Maybe you can take this one at the bottom, that would be a good one, but then a wick through. So what can you do? When we're on a very high time frame, so in my case, that's going to be about a weekly time frame or a monthly time frame. These are very, very good for directional confluence. You can either use them for very big swing trades, which is obviously useful, or for direction. So you can know by drawing these that, hey, if we react to this, we have a few options. We can take position based upon it, but we can also just use it for direction. For example, if you have a lot of spot trades open and you see this hitting, like, hey, we're getting some bearish candle closes at that macro very important level, maybe I want to de-risk that. Or if you're very good at reading candles, for example, or if you have any kind of different trade setup that you like to use, be it support resistance, be it oscillators, be it indicators, be it whatever you have, you can get a direction from the ABCD, which in this case would be, hey, we touched it from the bottom. I think we're going to go down once we hit that. And then look for setups using other confluences. In this case, because obviously it trade harmonics, right? In this case, we also had on a lower time frame a very nice bearish harmonic right over there. So we already had the directional input. The ABCD was telling us, hey, we are likely going to go down after we hit this level. And then on a lower time frame, we can find a short setup, just like that. And now we have it entirely time frame aligned with macro levels, which makes it so confluent to play out. And it doesn't always have to be harmonics, right? You can use this with everything. As I said, if you're good at reading candles, you will know that this is an inverted hammer candle or a doji, whatever you want to call it, or a shooting star. And you will know that this candle is incredibly bearish. So you would have had 2 short setups based upon it. Personally, I really like using individual candlesticks with this. I think candlesticks are a great confluence. But that's kind of the second thing that you can mainly do with it. So the first thing was to just take position based upon it. The second thing is get a directional input. This will tell you where you think the chart is going to go. And then go into a lower time frame and use different trade setups to actually get the direction. That is the core of harmonics. That is like the baseline. These are within every harmonic. So, are there any questions about that while I drink? Because as you may have noticed, I'm talking a lot. So my throat is going to kill me later. Okay. Hey, grass joining later when drawing harmonics. This is an harmonic. How would you have drawn the recent move? I can get into that later. This is just going to be a class. I'm not going to go over CMP trades right now. This is just going to be so everyone can look back onto this class and actually learn from it. So if they want to study harmonics, this is like a place they can go to. But actually, I can give one little directional input because, quite frankly, we did react off of an ABCD. We had 2 reactions off of ABCDs. So the first one would be right here. We have a very nice ABC with 0.618. This is 4% outside, which is within 5% tolerance. So this is going to be at the 1.618 right over there. That is the first one that reacted. I'm going to showcase how to draw the box one more time. After that, I'm going to get into the 5-leg harmonics. So first, a fib from B to C, then a trend-based fib, A, B, C. And what you will see is, hey, 1.618 right there, 1 right there. That is going to be my box. Just like that. That is the first reaction we had. Then the second reaction we had, let me, as you may have seen on my charts, I don't like when I have a ton of these on the chart, so I always hide these. I usually put them in folders, right? What I actually do is, I do it like that, folder, rename, A, B, C. Then the second one we had was, I think it was this one, doing it out of the top of my head. No, we haven't touched that one yet. Then it has to be this one. No, there you go. Okay, that's whatever. The one we're currently having, which is a bit more interesting, this is also a harmonic right now, but I'm not going to use that harmonic because it's an informal pattern, is a bit more of a difficult one. I'm not going to go into it too much. Essentially, what we can do is draw it like that. We went right through it. So to the person that asked this earlier, to wait, what was it? That was the question. You always take a position before or after a candle close. I even posted this one in chat. It was hidden behind harmonic, right? But I posted this one in chat and I said pending candle closes. When you have extreme price action like this, be aware This is why I don't set limits. We have extreme price action, always wait for candle closes. Because sometimes these levels will simply not hold, even though they hold other times. So I always wait for candle closes. Okay. Now that we've done that, let's get into the actual 5-leg harmonics, which is what most of you will recognize as harmonics. So when we look at harmonics, first of all, I'm going to post 2 cheat sheets in chat. Well, actually, I think I'm fine with just one. I'm going to post this one in chat. I'm going to reference to this a bit. If I show this one on stream, it's going to be completely unreadable. So I'm going to have to put it in chat. When we look at harmonics, what you will sometimes see is this. I have to backtrack a bit. So I'm going to draw the entire harmonic first, and then we will get into it. Where are we? Wait, what? Oh, yeah, okay. I'm on an entirely different place than I thought I was. Okay. So, most of you know harmonics like this, because this is what they usually look like. You have an X, A, B, C, D. The tool we use for this, first of all, is the XABCD pattern. Cipher patterns is a very big misconception. You only use them for ciphers, for no other harmonic. So even sharks, even butterflies, which I know some people think you have to use a cipher pattern for, only for ciphers. It calculates the levels differently. It is invalid for every other harmonic pattern. So for regular harmonics, we only use the XABCD pattern. Now, what you may notice when I draw this is, hey, first of all, we have an A, B, C, D. That is what we just drew. That is a tool we essentially just used. That is this one. It calculates the same thing, and it is, quite frankly, the same thing. That is also why harmonics start with an X. However, as you can see, if we actually draw the ABCD, hey, it didn't react at all. That is why we use 5-leg harmonics. I'm going to get into how we calculate this first, because this is a big difference. And then I'm going to get into how you know if the ABCD is going to react or not, and why we use the actual 5-leg harmonics. So let's look at the ABCD. Let's draw it again. I'm going to draw the trend-based fib extension that ABCDs are based on. I'm going to draw that lightning pattern. However, this time, I'm going to enable the other fibs. As you can see, we have put it onto a fib tool. So why should we not use the other fibs? To reduce chart clutter a little, I'm only going to use levels above 1. You can use these below 1 too. But I'm going to keep it as clear as possible to make it easy to follow. So, what we use for ABCDs is a trend-based fib extension tool. Your 1 is going to be the most important level, but after that, we have a bunch of other levels. These levels might be slightly less confluent, but they are very, very important when we look at harmonics. So, how do you know which one is going to react? First of all, what we call this is an alternate ABCD, just an alternative version. So we put alternate before it. How we know if it's going to react is by aligning it with the actual 5-leg harmonics. So, in this case, we are looking at a bat harmonic. I will get into why and how and etc. after this. We're looking at a bat harmonic right over here. Wait, let me remove the ABCD actually. You're looking at the bat. And as you can see on the bat, it's a bearish bat. We have an X, 2D, 0.886. That is the only number where we have a bat. So, if we have an ABCD like that, it is still there, but we use it at the 0.886. And that is why we use 5-leg harmonics, to give us that direction. Where is it actually going to react? So let's get into that. Let's get into how you can actually spot the 5-leg harmonics. Oh, let me keep that one on. Okay, so as you may have noticed, we use M or W shapes for harmonics. You can see that there's an M shape right here. That is the bullish one, and then there's a bearish one that is a W shape. So that's what we look for first. We use the same point placements as you would do with fibs. So you take very important swing highs and swing lows. For example, this was the old all-time high. That is a very important level. So let's start there. And then we look for W shapes. When I look at this chart, I can see a few W shapes. I can see this one. We have a very nice W there. And I can see this one. We have a very nice W there. Very standard pattern recognition. So let's face that. I'm going to keep it as simple as possible, so I'm going to ignore this one for now. It is valid, but it didn't hit. It ended up somewhere over there. So I'm going to start here. A very important swing high to a very important swing low. And we know that it makes a W. But there's a few things to know. When you draw your points in your M or your W shape, I'm going over bearish harmonic now. For the bullish ones, it is the exact opposite. When you draw these points, X has to be a very important swing high. And it has to be the highest point until you get to A. So what I mean by that is, let's place these here. Let's look at X. This X placement, for example, would not be valid because between X and A, there's a higher point. So this one would not be valid. It has to be the highest point. So I can either choose this one or I can choose this one. Then, for the other point placements, it is the exact same thing. So when I place my X, A, B, my A also has to be the lowest point in between X and B. So this one right here would not be valid. Because if I look at my points, this higher, 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 it's all fine. This one is lower. So this one isn't valid because between X and B, there is a lower point. It has to be there. So I would have to place it right there. And after that, we essentially simply follow what we think are the W shapes, X, A, B. And that is where we can check if we're going to have an actual valid harmonic. When you place your X, A, and B, we can take a look at the cheat sheet. Now, after a while, you will know these out of the top of your head because the ratios are very straightforward at some point. And once again, you can probably not see it properly on stream because image quality, etc., etc. So you probably have to take my word for it a little bit. What we have here, when I look back at our X, A, and B, is 0.52. And remember that tolerance I gave at the start of the stream, that 5% tolerance max? That applies to this too. So 0.52 is plus or minus 5%, 0.5. That is the fib we're looking for. So let's look at all of these patterns and see which one has a 0.5. Let's look at the Guardian. X to B, 0.618. So this one doesn't work. So we can entirely ignore this one. That 0.382 or 0.5. Very important, that is an OR. That is not an in-between value. For X to B, it is always OR. So this one could be it. We could have a bat. And the crab, 0.382 or 0.618. No, we have 0.5. It's not this one. Same for the deep crab, that's an 886. Same for the alternate bat, that is a 0.382. Butterfly 786, doesn't work either, etc. We just keep looking at an X to B and we simply cross out all of the wrong ones. So when we do that, only one with 0.5 X to B is the bat, right there. So we know we have a bat. Now that we know we have a bat, I can pull up a bit more of a detailed cheat sheet that you can actually read. And that is going to be this one. So we know we have a bat. So all we have to do now is simply place the other ratios and see if they are valid. It is A simple mix and match. We place the ratios, we check if they're valid. So we place them again. X, A, B, 0.5. And we place our C. When we look at A to C, you will see I have 0.618. I mentioned X to B, so this ratio right here is an OR value. It is 0.32 or a 0.5. For A to C, it can be an in-between. It has to be in between 0.382 and 0.886. It is the same for B to D. X to B is one we're very strict on. That has to be OR. The other ratios can be in-betweens. So, is our A to C in between 0.382 and 886? Yes, it is. So, now that we know that, we know we have a bat. Where does the bat end? X to D 0.886. So let's place it right there. And then the last thing there is to do, keep in mind this is what we looked at, that's the 0.886. The last thing we have to do is we look at B to D and check, is it valid? Is it between a 1618 and a 2618? Yes, it is. That's essentially 2.24. It is in between them, it is entirely valid. So we have a valid bat right there. And that is essentially how you get to harmonics. Now that might look really complicated, and it took us a while. So I want to say a few things about that. First of all, when you start trading harmonics, it takes a while. When you start trading them, and you're going to start looking for them, and then checking it back to the cheat sheet, looking if all of your ratios are correct, it is going to take a while. When I just started, it took me 5 to 10 minutes to find a single harmonic. But this is something that humans are inherently pretty good at. This is very basic pattern recognition. You can already do it because you do it subconsciously. You just can't do it manually yet. So over time, if you practice this, you will get way, way faster at it. To the point where, and that is what I have right now, and what a lot of harmonic traders have, you will look at a chart and you will simply see the harmonics. It is going to take seconds at max. Because you might have seen that in my previous streams. Whenever I look at a chart, I will simply look at it like this. I will see the harmonics, and then I will place it wherever I know the harmonics are. So that comes with time, and that comes with practice. If you practice this, you will get really, really fast at it. So, when we do that, we know that that is a valid harmonic. Harmonics are, execution-wise, a lot simpler. What we do technically is you short, in this case because it is a W shape, you short at D. We place stop losses at X or at any other place you want to. Keep in mind, you don't have to only use harmonics for every single trade, right? If you are someone that is really good with support and resistance, just place your stop loss above resistance. That is entirely fine. Technically, we enter at D, we put a stop loss above X, and we take TPs at the fibs. So for TPs, we usually take a little fib like that. You've probably seen me do this a million times already, because it's something I do legit every stream. And the fibs we look for are the 0.382 and 0.618. Those are our most important fibs. That is essentially a step-by-step guide on how you look for harmonics, how you chart them, how you validate if you're doing it correct or not, and how you trade them. So are there any questions about that? None for now. That's good. Well, thank you. I have been, what's it called? I was a teacher for 2 years. So I'm doing, what's it called? I'm just using the same things and just using it in trading now. That is also one of the main reasons why I'm an analyst in the first place, because I really enjoy teaching these kind of things. It's really fun. Okay, Now, that is how you do it step by step. However, before I show some more examples, I want to get into something I have added that I think is very, very useful. Because this is the absolute technical way of doing it, like a complete textbook. I've added one thing, because these are the two technical targets. I've added one very important thing. In my opinion, there is a third technical target. And to get to that third technical target, we can use our knowledge of what we have just done at the start of the stream. We know that when we react to fibs, when you have a very important price leg, just like that reacts to fibs, like an 886, for example, we're going to have a very important level at the opposite side of that. Or to be more exact, at the ABCD. So in my opinion, the last technical target is the ABCD on the other side. If we draw it ABC, you're going to see it's almost exactly 0.886. So we draw it down to the 1.13. If we want to be a bit more precise, we can draw it manually, right? Exactly as I've done before. A fib from B to C, and a trend-based fib, A, B, C. And you will see that they are very, very close to each other. So we'll place a little box there. And this is something what I personally think that harmonics become a very beautiful system. This is where you add a few options. First of all, you have a 32p. That is way lower down. That is very nice. Because if it does get there, you have a really good target. Second of all, and that is where it becomes really interesting, this is a pattern we use for trading. That is a place where you can long. This instantly gives you a point of interest to look for longs. So not only do we have a short setup, we can also instantly say, hey, I'm in the replay, don't worry. BT isn't going that low. We're at 60k right now. That's very funny. This instantly gives us another area to look for longs again. So we instantly know if we get there and we react to it, we can look for longs. So not only do we have an extra TP, we also instantly have a place where we can say, okay, that's where I want to take my next trade. And when you let that chart play out, because obviously I've traded this, been there, we know what's going to happen. Not only do you hit the level, but you also reverse from that level. It is a very nice system to trade because you can get moments like these where you actually just go from one pattern to the other to a new one to different, etc. So the textbook technical targets are the 0.32, the 0.618. In my opinion, the last technical target is where the ABCD completes. So that is almost always going to be my final target on plays. If I'm doing very high time frame trades, usually it isn't, because that's going to get me to ridiculous targets. Like for example, in Link, that would get me into the hundreds. I don't think Link's going to go there, so I won't put that target on my chart, right? But when you look at different kind of setups, like for example, a daily time frame, this would be more or less a daily time frame. It's very realistic. A 113 on a daily time frame, that sounds solid. That's not that weird. So that is the third technical target at instantly level to look for new trades. So now that we've done that, let's showcase some more harmonics. We've drawn a bat, but there's more to it. There's more patterns. So I'm gonna go over to this area and quickly enable replay. To showcase something else. Or something else, we're going to do the same thing again. Going to give another example of how you can look for trades using it. So, essentially, what is usually a good place to start looking for harmonics is when you have a very obvious high and low. So in this case, when I look at this chart, I have a very obvious high, I have a very obvious low. These are very outer areas, right? I know that is the exact high, I know that is the exact low. So no matter what, I know my placements here are correct. And then what I would usually do, or what I used to do at the start, is I would just go like this until I saw a very significant high, where I can also make a W shape, like this one, like a 0.618. Now let's get back onto the cheat sheet. I'm going to do the cheat sheet 2 more times, and then I'm going to do it a bit quicker, because it takes a lot of time, but it's very useful to see when you just start learning out. So, we have a 0.618. When we look at 0.618, I am on purpose, but I am ignoring sharks because they have some extra rules to them that make it a bit more complicated. So when you start out, I recommend to not draw sharks. They're a bit more complicated, they have very weird tolerance, so it's at the start it's better to just use these ones. So, 0.618. Once again, cheat sheet in chat if you cannot read the numbers. We can look at a Gardley, X to B. Or in this case, it's very short, right? So we look at that. 0.618. Hey, that is good. It can be a Gardley. Go to the bat, 0.5. Or 0.382. Doesn't work. Crab, 0.382 or a 0.618. That is great. We have that 618. So now we have a Gardley and a crab. Then a D crab, 886, alternate bat 382, butterfly 786, sharks, we ignore these. So we have a crab or a Gardley. Now, I'm gonna tell a secret about crabs and Gardleys. I'm gonna put them both on the screen in a bit more detail to also show what I mean. It's a Gardley, and this is a crab. If you take a close look at these are the exact same thing. X to B is the same. A to C is the same. Then we get to X to D and B to D. They are different. The main difference, the main important difference is X to D. It's a 0.786 over here and a 1.618. That is a wild difference. And as you can see, B to D are also different. That is simply to make sure it works. Because there's no way that if this is a 1.618, this will never be a 113. That's not possible. So, the only main difference between the crab and a Gardley is B to D. Or what's called X to D. So, what we can do, or actually let me keep that on there. What we can do is we simply draw them. So I will once again start X, A, B. C is C between the 0.382 and the 0.886. Yes, it is. And then I'm going to start and draw my Gardley. Gardleys end at the 0.786, so that is my first level of interest. Right over there. Now, with Gardleys, and this is always going to be the case, because it is almost the exact same pattern, they also form crabs. It is almost the exact same pattern, so it's going to form the same thing. So we have an extra level over there at the 1.618. I want to say that this level obviously got front ran, so this one doesn't. I'm going to delete it again, but know that, hey, do I have a Gardley or a crab? The answer to that is both are possible. You're going to hit the Gardley first. However, something like this can very often happen. You react to the Gardley, go down, go higher. In this case, we didn't get there, right? There's another pattern here, but this could have gone to the crab. That is something that very often happens. You react to the Gardley, take a little bounce. This would have hit TP1 at least, probably TP2, and then go up. And then you hit the crab. That's something very common. So I'm going to delete those again. Going to delete the crab too. Last thing we have to do is we look at B to D. Is it between a 113 and a 1618? Yes, it is. It's a 1 for 1. That fits. So, that is the first one. Now, something that, once again, is very nice about this system is the exact same thing I just did with ABCDs, but now with X to D and X to B. What you can see is, hey, this might have reacted. This was a very nice Gardley to trade. If you took a short there, you would win in good profits. But it also reacted exactly there. So we have a reaction on the 0.786. And when you look at the cheat sheet, what you're going to find is that there is a pattern that has an x to b 0.786, which is the butterfly. This is very common to happen. When you get good reactions, once again, same as with the ABCD, it is more often than not going to form a new pattern out of that same ratio. That is very, very common. So we can just do the same thing again. And you don't have to overcomplicate this. You can just draw a new pattern. As I said, I always use boxes, right? So this one, let me just draw it loosely, right? I usually always measure them, but for the sake of this, I'm just going to mark the box. And I always hide them, because I think it's very confusing to have a ton of different patterns on my screen. It's going to be like a spider web. It isn't easy to look at. But let's do the same thing again. X, A, B. And you'll see that is a 0.786. It's within 5%. Technical target is 5%. I always use 3% personally. It is also within 3%. Gonna place my C. And do note, the C is on the right. It is gonna be to the right of B and not at the same place like already was. Because it is XABC, not XACB. Doesn't make sense. So XABC, is this between the 0.382 and the 0.886? Yes, it is. Also, let me still have it here. Yeah. So look at that. Is it between the 0.382 and an 886? Yes, it is. So where does it end? X to D 127. So I'm going to place it right there, the 127, just like that. And there we have our new pattern. Well, there we have it. We still have to check, is B to D actually valid? Do we know? Yes, it is. It's between the 1618 and the 224. Crazy how good this is. Yes, it is really good, but do keep in mind that I am data fitting this, right? I'm going back in time to where I know the patterns are. It is not 100% hit rate. Don't get that idea. I am data fitting this. So that is, once again, we've now done a few examples of how you draw them, how you look for them. That's how you do it. Now, for stop losses and entries, I want to say a few things. First of all, the entry, all of my entries are always based on harmonics, but I cannot always base stop losses upon it. So for stop losses, for example, this one, I don't have an X point. I would love to place my stop loss over here, but that doesn't make any sense. So we can use other things we learned from it. For example, when we look at this example specifically, hey, we had a very nice sweep. So maybe I don't enter on the first one. If I see it on the second one, I can place it right there. But what if we enter on the first one? If we enter on the first tap of this, where do you place your stop loss? I always use different things for this. I will use fibs from higher time frames. I will use order blocks. I will use others, important highs or lows, something like this. I use other confluences for this. That is the main reason. You don't have to base everything on harmonics. Harmonics are very good, and they're essentially all I use for my trades in general. But sometimes for stop losses and for TPs, you have to use other levels. Things like volume levels are really good. It's like a volume profile. Things like order blocks are really nice, etc. Use your other knowledge that you already have to complement it. And then obviously the technical targets. I'm going to place it just like that. Harmonic TPs, technical target 192. Just like that. And as I said, my last personal technical target, because this is a 1272, I can do the exact same thing as we did earlier with the ABCDs. Oh, I'm in the wrong place to grab my cheat sheets from. What does the 1272 refer to? That is 0.786. These work both ways. You can do it in both ways. So in this case, we start with a 1272. So my ABCD is going to end at a, where is it? At a 0.786. So somewhere along those lines. Let me draw it out. I'm going to do the same thing again. A trend-based subextension ABC. and the regular fib B to C. And we will see, hey, 786, and that trend base fib extension 1 right over there. So these would be my 3 TPs for the trade. And once again, not only do we see this one play out because we know it's data fitted, you also see a very nice reaction when you get to that ABCD. Both sides are tradable. It isn't always going to react, but it is a very nice area of interest for longs. So when you see things like this, you can absolutely take positions based upon it, either as a hedge or simply to reverse a trade. So that is essentially what I wanted to go with today. That is essentially my harmonics crash course. So in about an hour, how do you look for harmonics? What are they made of? What harmonics do we have? How you trade them? What are your entries, TPs, all of that. This is not a class that is going to instantly make you good at harmonics, but this will absolutely set you up that if you want to trade harmonics, this will tell you everything you need to know to get started on it. There is more to harmonics, but these are the basics, and it's an absolutely great point to start. So that is essentially what I wanted to go over today. Are there any questions about this? About anything I've gone over in stream? No? Okay, that's great. No, I ran out of water. In sad times. Oh, great, that was interesting. That's great. I'm glad you like it. What is the data accuracy in harmonics? From the D point to TP1, so the 0.382 is about a 75%, to TP2 is about a 65%. And the validation that is used for it are the technical targets, so that is the X point on all harmonics with an X to D below 1. The technical invalidation for the others can be found on cheat sheet, whatever it is. It's about 75% to 65%. Those are the known numbers. My personal numbers are slightly different because I use confirmation, so I have slightly higher win rate than that, but slightly lower entries. Yes, it's absolutely recorded. But those are the like kind of official-ish numbers. All right. Well, in that case, I'm going to quickly answer the question I had earlier about what I think BTC is going to do or how we will draw it with harmonics. BTC currently does not have that many. BTC is in kind of a crossfire where we have a very nice deep grab over here, which is the one we traded. This is the one we base the trade upon. Where, let me draw it. I'm going to take the fib X-ray. I said there's more to harmonics, right? You can essentially draw them out manually and you will get very confluent areas. But that's something that's too difficult to start on. So I usually skip that at the beginning. Either way, we have a very nice deep grab that we reacted to. I think BTC has 2 options. I think we have the option to go to the deep grab, but we also have some uncompleted harmonics slightly higher up. So I think there is also the option of going higher first. And that brings me to essentially the last thing I should talk about, and that is this. There are a lot of harmonic traders that long or short uncompleted harmonics, like this bat right here. This is an uncompleted bearish bat. Harmonics do not support the idea of doing that. And the reason for that is this. Let me pull up a bat again. As you can see, when we look at A to C, it can be anywhere between A to C, 0.382 and 0.886. There are a lot of traders that long or short bats. this is not a good idea in general. It works for a lot of traders because they are very good at doing other things too, or very good at reading the market. Harmonics themselves don't tell you to long or short at C. They tell you short or long at D. That is the most important level. And one of the reasons for that is, let's draw the 0.382 to the 886. We have 382 right about there, and then the 886 right about there. And even worse, when you get into sharks too, sharks can go all the way from a 113 to a 1.618. So anywhere within these three lines is where you could technically long or short a C point. This is not a valid thesis. There is way too much space. So I wanted to get that out of the way. Longing or shorting C points, you shouldn't do that. If you have a lot of confluence for one direction, you can definitely use it as a confluence and as a target, but it isn't a sole confluence to start a trade on. So what do we do when you see someone like this? This is an uncompleted bet. It is a very valid bet. However, it is a valid bet at the D point. So as you may see in my channel, what we do with uncompleted harmonics like this is what I base my trades upon before they hit. So, differently put, if we hit D, and that's a big if, I don't know if it is going to get there, but if it does, that is when we can look for shorts. If we get there, that's when I'll short. And we will more or less end up with display. Entry at D, stop loss above X. What do we target? We don't know until the top is formed, but I can give a rough estimate by just pulling a fib to that point. This is more or less the targets we're looking for. So, in my eyes, looking at harmonics, there are two options. Two options that I'm looking at. I'm looking to short BTC if it gets there, and I'm looking to long BTC potentially if it gets back into that deep grab. Where my stop loss is going to be, I don't know yet. I haven't planned this long yet. Because we're already in a long, I'm probably going to recompound that. Either way, these are my two options. That is what harmonics are telling you. Harmonics are telling you either short in this region or you long in this region. Until any of these is hit. Maybe on a lower time frame there's something, but on this time frame there's nothing. So that's kind of the last thing I wanted to mention is uncompleted patterns like this are great because you can anticipate like, hey, if we do get there, that is like a very big area of interest. But that doesn't mean it has to go there. It can just go lower. It doesn't have to go to that bad. There's a lot of uncompleted harmonics on this chart. Not all of them are going to hit. Okay. So that was the last thing I wanted to mention. If there are no more questions, I'm going to end the recording and the stream in a bit. I want to thank everyone for coming, first of all, because it is very nice to do a stream like this. And I do want to say, now that we're here anyway, I've reopened my mentorship classes. We're going to start again this Sunday. So if you are interested in learning harmonics more in depth than this, send me a DM and I'll send you some more information on that. And apart from that, that was everything on my part. So that was the end of the stream. Yeah, no problem. I'm glad you enjoyed it. Okay. Well, those interested in the mentorship can send me a DM and I will send you some more info. And apart from that, I'm going to end the stream here and I will see everyone next week. And I'm going to make sure the recording is uploaded within like 50 minutes or something. However long YouTube decides to take over it. Alright. Enjoy your evening, everyone.